2025 Canada tax changes. In this video, we'll talk about capital gain, how you can save capital gain, TFSA, RRSP, FHSA limits, most important change to tax slab in Canada. First of all, let's go to capital gain. So you need to understand in 2024 budget, new rule was passed where you need to pay more capital gain on the profit part when you're selling your real estate assets, your stocks, your mutual funds, which was initially 50% on the profit part. Now it has been raised to 67%, anything above 250,000. Imagine if you're selling a real estate which you purchased 2 years back for 600,000, now you're selling it for 800,000. So on the 200,000 profit, you'll be still charged 50% capital gain. But if you are selling, if the profit would have been 300,000, you have to pay for 250,000 a 50% capital gain, and on the remaining part 67%. This means as an investor, you need to pay more taxes for that year. But the main point is how you can save that capital tax. For a real estate investor, the key strategy is to go for prime residence. Why? Because if you're living in your prime residence and you're selling it, any profit you're making, it is tax free. And that's the best strategy to build wealth in Canada. What next? In case that is your second property or that's a third property, that's investment property, how you can save your capital taxes? The money that you are earning as a profit on the sale of that, put into your RRSP limit. So the portion will be tax exempted, and in the future, when your income is low, you can always withdraw your RRSP. You can also offset your capital gain with a capital loss. Imagine you purchase a property in the peak of February 2022 and you have lost 100,000 selling it right now. This loss, you can save it, and in the future, if you are making any capital gain, you can offset with this capital loss. So don't get worried if you're losing some money in real estate also. Another is split income with your family members. If you own a property jointly with family members in a lower tax bracket, their share of the capital gain may be taxed at a low rate. For example, you can purchase a property with your parents, with your kids who are making less income. When you sell the property, 50% of the amount that is profitable goes into your income and 50 goes into your partner's income, and they'll be paying less taxes. That's another strategy to save taxes. Another is keep track of all the renovations and improvements that you have done in your property so you can offset your capital gain. So for example, you have added a kitchen or a washroom, always have that slips ready and you can offset the profit that you have made. Also, whenever you're selling the property, any realtor commission you have paid, any upgrades, stagings, or any other taxes that you have paid or home insurance, you can always offset in your capital gain. Another smart way is timing the sale. Whenever you feel like your income from other sources is less, that is the best opportunity to sell your assets to avoid capital gain. Another strategy is to spread the gain over multiple years using the capital gain reserve, allowing you to report the gain over up to 5 years. But I always advise it's better to have a right professional, an accountant who can help you to save this capital gain, because no one loves paying taxes that also own the assets or investments they have hold. Now let's move on to the TFSA and RRSP part for 2025 and also FHSA. So for TFSA limit, it is remaining same for 2025, which is 7,000 as per the previous year. For RRSP, it is being increased up to 32,490 for the year of 2025. You need to understand RRSP is basically calculated based on the minimum amount, that is 18% of your base salary, or the peak limit that's being set by the government. So that is being set as 32,490 for the year of 2025. And also for FHSA, you have limit of 8,000. That's your first time home buyers. You can save that 8,000 up to 40,000, and that can reduce your tax obligation. I always advise, even though you are going to buy your home in future, let's say 2-3 years down the line, open your account which is FHSA and don't put any money, but that will give you a privilege to carry over the limit which will be accumulated during the year. So you can take the benefit in the future also. Also for RRSP, for first time home buyers, you can withdraw that money. Per person limit is increased to 60,000. For family of 2, it is 120,000, which you need to repay back to RRSP in 15 years. Most important is your tax slab changes. So whenever you are employed or self-employed, whenever any salary that you withdraw, you need to pay taxes on that. As of year 2025, this being adjusted with the inflation number of 2.7%. So the slab have moved up. If you see the numbers from 0 up to 57,375,000, you'll be taxed 15%. Anything above that up to 114,750, it is 20.5%. Up to 177,882, it is 26%. More up to 253,414 is 29%, and more than that is 33%. So every year this is being adjusted based on the inflation numbers. Also, a bonus tip, we have more savings in case you're leasing your vehicle. From 1st of January 2025, the limit of tax write-off have been increased up to $1,100 per month. Further, we have tax break period, which is happening right now from 15th of December up to February 15, 2025. You don't have to pay HST and GST on some of the components like your restaurant meals, drinks, children clothing, food and groceries. Let's say you go to Walmart, you're buying a product for $3. You're not paying any GST components if you are in Ontario, so it's a saving of 39 cents. But I have heard of the record, you can validate that and put your comments, that right now the Walmart have changed the rates already to $3.39, even though you are not paying taxes as per the government policies, but the price have already gone up. But I feel that's not good for the economy overall, because right now we are in a money crunch. Economy is slow. If it is already $3.39, you're purchasing some product, who knows whether those big organizations like Walmart or Costco will reduce the price in the future. It is a hit on your pocket. So that was about the tax changes for 2025. Share your thoughts and comments. If you have any particular topic that you want to cover, we'll be more than happy to share.